Now, if we look at, let me, I'm going to start the motive wave. Where are we at here? I'm working a bunch of things. NVIDIA, you see, like, same thing here on NVIDIA. You see the problem here? Four. You see how NVIDIA ATR is dropping for weeks? That's why the stock is not trending. Remember, distribution phase, when the stock goes sideways, the price will go sideways, your ATR will drop. Always remember that. ATR will increase when you're gonna go in the accumulation phase. Back here, you see the value 9.49. Sorry, 9.47, 9.47, 10.9. You see how ATR moves higher? It rises. You know, look right there from the last this 1 week, 2, 3, 4. You see right there is declining. So don't. Well, I've taken few shots on the video, as you know. I mean, buying something here is not gonna play out. Yeah, it's just you have to watch this. It's very important because you look what the how Nvidia is trading. It's sideways. At the same time, right there, you have a declining ATR. Only 4 points. So now Nvidia has to make a wild push to the upside. It has to make a two-standard deviation move. A two-standard deviation move would be 8 points. So from 137 plus 8 puts you at 145. Still doesn't even put you to this mark. Or you dreaming about this. That's completely out of the equation right now. You don't expect this kind of an upside when you have a declining ATR. It's just not gonna work. Your premium is gonna get burned. Pay attention to this. It's very important, especially with your options and uh, like if you have shares, like if you're just buying shares and not trading options and stuff, then you're fine. You don't have to worry about this part because if you're in for quite some time, yeah, I mean that is different. When you trying to buy calls or trying to make a spread or something, you should consider this. You should see, okay, do I what I am looking at from the last couple of weeks, how does is the ATR is dropping, or if it's kind of stays like this, you see like this, see how the price was trending higher, ATR was rising, and it kind of goes sideways, now declining. So when it declines like this, it's gonna rise back up. Keep that thing in mind. It's not just gonna go almost down to zero, right? You just have to remember that as well. So Nvidia will move. It's just a matter of like which week it can it go another week to the downside to sideways for another 4 more points, but this will starting to rise back up. That's I can tell. Those are just your predictions, okay? But you don't have that in front of you to make that case yet. You can sit and think whatever you want to think. That is just relevant. You can think that's fine. You want to sit to talk to your friends and Nvidia is going to 300 or whatever, fine. I mean, we'll get there, but you have to trade what you see, not what you think. Okay? Talk is cheap. You can sit in day and night and talk anything you want. Doesn't mean anything. So, what the point here is that where's the is this? I know it because how long we've been tracking this thing. Is just this entire area that I just highlighted, going from this high, and when we look what's going on here. So I mean, I do like to see the upside. I mean, from here, but this, I mean, we've taken few shots here to the, on this trade. I mean, I was thinking about it yesterday, and then I was like, 136, 4 more points is going to put us right back at 140. 136 down to 132. I was like, I'll go with QCOM. I'll watch this thing on Monday and then we'll see if it makes sense. I'm planning to roll another spread. Um because looking at the the ATR that I just showed you, it could go up to 5 to 6 points. So and then Nvidia can cash the upside. But looking at this 1, 2, 3, 4, that's 1 month, right? And then this 2 weeks, right? So for a month and a half, I mean, stock just not doing anything. As you can see, just it's in a 4, 5 point range, So went up to 141, sold off down to 134. It just, yeah, when Nvidia had a higher weekly bar, which is a good thing, but it look at the open and close here now. It hardly had any body left, It just big wick up to the upside. At least this one right there was something to see. That's why I was like, I'll take a shot with QCOM. QCOM rotation looks good as well. I was just gonna see if I could target 160 price on a QCOM. I think this is the first time I'm actually trading that stock. I don't think I have ever traded QCOM before. I was working on this wave count that just looks so nice. I think I posted this thing as well. A daily wave count looks really nice. Really like this one. Um, just a simple ABC move, to the down to 101.47. You had a pretty nice clean move to the upside. Yeah, you got a diagonal here, up in one, down into 78.6. You got a wave three right there to a 200%. That's almost a textbook print. Then you got a three wave decline down to 23.6. That's the ideal. 23.6, 38.2. This is your ideal retracement for wave four. Then got a huge move back up in wave five. So you have a pretty nice completed 5 waves. And then from here, I'm just start looking at this as a three-way move. It looks like a three, it doesn't look like a five. So you gotta like call as a doesn't I mean I would put as a ABC here. We've got three here, choppy X, lot of back and forth consolidation here. And Y wave here. A Y wave here, just make another ABC down here like this. So so now you have extended W, connector X, most likely gonna have a shorter Y, right? So the ideal retracement for the Y wave is always going to be 61.8, not to 100%. 100% it can get there, but 50% time retracement with price and time is right there into this, pretty close to it, almost there to this 152.98, where we're at 157. So the price and time is there. So I'll see. I mean, if the price from here is trying to make a move, at least get to, that's going to be way too much, around to this mark, at least to this high right there. That would be nice. So that's the zone. 50% retracement here, which is 152. This is from this the the move up from 101.47 from this low. The high was 193.58 from this high. So down to 101.47, made a move back up to 230. That's a lot of upside here. If you look at that, was 127%. So from 127% retrace, almost given half down to 50% of this entire move. And then from here, I'm trying to see if we can get this thing back up. I think QCOM is a good one to buy or hold for next year. It's a pretty nice clean 8 swing from the low. You got 5 up, you have 3 down. Yeah, the worst case that it could take another dip lower. I mean, if the market's going to get heavy, you know. But this, the support right there, 151.39, which is right there. So we're fighting. This one is fighting this area right there pretty good. I mean, the worst case is that it rolls over, comes right back down to this 138, 30, 40, 61.8 retracement. But I think it's still, it has a potential because this decline right there, it looks corrective compared to this 5 move to the upside. So 165, was right there. That was the one I was gonna try to target to this 161, 61, 61 kind of area. This high right there. See if we can try to take this high, and then we'll look for this B wave high 165. That would be the upside that I would, for now, I would uh, I would look for on the trade. Got plenty of time. If we could, I hope we can get there Monday. It will be nice. Um, See if we can get here. If we're gonna start getting here, then we just have this trend line resistance. Sorry, the channel that has to break as well. So if that managed to break, or if the price managed to come back out, then we could, this thing can, then then we can expect this resistance right there, because this is where we have the largest decline toward this 193. I mean, I like it. I mean, I think it's a good looking wave count. Um, and I think some guy on the CNBC was talking about, like, he's adding to his position, the QCOM, whatever. He's long as well. Doesn't really matter. I mean, I took an option trade. I mean, um, if the price do kind of like come back down like this, I would be interested in start buying some shares. You know, his move looks nice. We can make a squeeze out of here. Then again, this depends all on the semis and stuff. And I think QCOM was in a big fight with ARM Holdings. Yeah, they're just like kind of suing each other. Um, I think that one is over, and we'll see. So it's just, I mean, I don't know. First time I'm taking a shot at this. Um, so we'll see how it plays out. I like the odds. I'll take a chance. See how it goes. Um, Nvidia here, same thing. I mean, 136. I mean, this is Nvidia really does not doing anything for the last 6 months. Here's a June high right there of 140. And as you can see, how many times Nvidia has climbed to 40, 140. You see all these highs here? It's crazy. This is just even the fact a lot of these Mag 7 made a huge run to the upside, including Apple, which is still going. And then you have Amazon, Google, Meta, like all these stocks has moved so much. Like it made pretty much all of these stocks had made new highs, right? Nvidia just, I think it just kind of it run its course for the first six months, and it just stays sideways. It's been sideways. You cannot make anything out of this decline here. Is just and like these are all like three-way moves. There's nothing that looks like this compared to this. You see, like there's so much overlap the price has. This is, I mean, this is not bearish. Absolutely not. I just don't see it. But declining ATR is just not gonna help much. You just gotta have to wait. And now the last week, this week high was this, and now we're gonna have to see if Nvidia can make this move back up again next week. You see, I mean it closed almost there. I mean, I was kind of a little bit disappointed because we spent so many hours, you know, when when the price managed to break from this channel right there, from this high and from this high, and then it came because I even told you, I was like, you gotta watch this 61.8. Okay. So where the price was starting to come back down. I was like, this is a strong resistance right there. And then the price backed off. And I'm like sitting, I'm watching. I was like, okay, good. I like this because this is a very good healthy sign. Because when you break a channel, when you get the breakout, you gotta come back down to retest. And then from there you can expect the price to rally back up. Oh, but then it's starting to come back inside the channel. And I took a picture yesterday. I was like, well, there we go. Now we're back inside here. I'm not going to move this. I want to leave it the way it is. Um, just going to watch this one for another day or two to see how price reacts here. You know, it broke here, came back, did the retest, cut the bounce. Then it came back inside, and now it closed right there on the line yesterday, as you can see. So we're just going to have to wait another day or two to see if it's done, if it can close 2 3 more bars, which is this is an hourly time frame. So if we can close like 2 3 4 hours, manage to close out of this channel again to see if we can make that push back to 140, 142. But then we're just back to the same range, you know 140. And the only play here for Nvidia is 140 to the upside, 135 at the money. That's the one spread that you can consider, 135, 140. And then when it dips down to 130, okay, so then you can consider making a 130, 135 spread. That's the 5 point range back and forth on this stock for weeks. Okay. The 142, this thing breaks, then there comes this. That's where the decision is going to get made. That is going to be the most important fib right there, 78.6. It's always going to be a last resort. Yeah, you break this, this will come really quick. You need to break 78.6. So it's a 5 point range back and forth. comes back to 130, bounce to 135, 135 bounce to 140, 140 sells back down to 135. 135 sells back down to 130. That's exactly what is going on here for the last almost a week and a half. So it just, yeah, if like a 5 point spread on Nvidia is like, I don't know, $2.80 or so every time I every time I make a 5 point wide spread. It's like $2, $2.50, the debit that you pay on one contract. So unless you want to do a single calls, but the point is that this is not gonna help. It's not helping. We need this to start moving like this, the range. It will, because when ATR drops week after week, it will rise back up. Um, Rotation on a Mag 7 for the next week, as we can see, everything is making a move down. I mean, there's a very good chance and that the Tesla is gonna see some downside. The reason why I mean is because when Tesla was here, that was back on November 22nd, 27. When I slide this thing, you see the date will change here. But if you look at Tesla here, you see like it came back down toward the weakening quadrant and then it made a hook back up. You see, it already formed a hook. That's the push from that hook because it's supposed to go this way, but it didn't. It reversed back up, right? That's where it ended up making that 488, well, the high 488, or whatever, the 490. And now it's making this thing. If you have a rotation that went up like this time is gonna go this way. It's gonna complete this circle now. So there's some bit of a weakness coming in Tesla because it's losing momentum basically. So I mean, it's just plus on top of it is so damn far away from the benchmark as well. So, well, stock moves. Um, Google is Mag 7 ETF. You see all these stocks are, yeah, there's, I don't know which one's gonna seems to hold, but here's Nvidia. Look how much, what is a big disconnect between the rest of the Mag 7 compared to Nvidia. Look where Nvidia is and where all these other stocks are. Only on one side. I would make a bet on this over this side for now. This is where the momentum is starting to go up toward to the upside. Lower ATR, that could increase in a week or two. Wave count, where we looked at it, looks good. It's just a matter of Nvidia can make, there's, I see more better odds of making a bet on Nvidia on compared to all the other ones for a couple more days. So that's the QCOM right there. It really doesn't matter. I mean, the point is you catch 4 points on QCOM or you catch 4 points on Nvidia. Let's say, right? What's the difference? Same thing, right? If you have 100 deltas on a trade and you catch a 4 point move, that's a $400. So if you take a 4 points here, or if you catch a 4 point here, what difference does it make? It really doesn't make any difference. So if you catch 4 point, it is all depends on how you have your how much risk do you have on your trade. If you catch 5 points here on Apple, and if you catch 5 points here on SMH trading, that what difference does it make? It really doesn't make any difference. Every trade is different, right? Your risk is defined by, by the delta that you're holding. It's going to pay you the same. It doesn't mean that the Tesla 5 points is going to pay you any different than Nvidia 5 points to the upside. It's going to be the same exact payout. But the point on some of these, the Tesla is that is a bit more volatile and it could move a lot more than 5 points. We all know that. Well, that's why that we always chasing Tesla because it is a very high beta stock. A 10 points here is $1,000 on 100. I mean, this thing can move. What was yesterday? 22 points. Yesterday it moved 4.95%. 100 is like almost 2,200 bucks on but you don't know which way the stock will go. But if you just do the regular math, I mean, okay, it all depends on your delta. That's how I structured my trade. Okay, I want to carry 75 delta on a trade, a 75 delta, and if I can manage to to hit a one standard deviation move, okay, that's my payout. If that one standard deviation move will go against me, that's going to be my loss. I mean, your risk is very well defined, and you just have to define your risk before you throw money on the board. You can't just blindly buy because one guy on a Twitter telling you like, yeah, this thing is going to 300 and this thing is going to 500 and Tesla is going to a 1,000. I mean, are you out of your mind? That's like, okay, well, it can go to 1,000. We'll deal with that. Then what's going to go there? But your screen is not telling you it's going to go to that 1,000 anytime soon, anyways. So what is the point going to bed and telling all your friends like Tesla is going to 1,000? Just what? Just just throw it out there and see, hope you're right one day, or I mean, some things, just certain things has to make sense. So 2 more days. I mean, Nvidia is it would be the choice. I mean, I took Qualcomm yesterday, but we'll see. Doesn't matter what happens. I'm planning to roll another one. I was like, I'll watch how market opens on Monday, and then we'll see. I can roll another spread on Nvidia, do another 135, 140 spread. Um, Seasonality is just okay. I mean, overall market. I mean, if we look at the overall year, I mean, materials are the worst one. Energy, real estate, healthcare. These four sectors were dead this year. You know, materials are down year to date now. It's the only sector just went negative. Um, because your real estate is flat as well. Well, 7% rate on 30-year mortgage is not going to help real estate at all. Those are the same 7% higher yields. It's going to hurt the small cap. So we just what we talked about earlier. It's just this. I don't know this. What is going on with these rates? Because these rates are the ones that's gonna. Because if you wants to make a bet on a real estate now, you always have to think ahead. Okay, because remember, markets are forward looking. If you want to say like, okay, well, I want to go long real estate and for next year. Basically, what you're saying is that you're willing to make a bet that 10-year yields will drop. That will help the real estate. That is how you look at and think of things. Like, okay, what would be my odds? Well, the screen right now is not showing you this that rates are backing off anytime soon. So that's one thing. And then second thing is this, you says like, okay, well, it's a beat up sector for this year. The real estate for this year, last year was up 8%. A year before, when we had the bear market, it was down 28%. Okay, that's when we have, that took the massive hit right there. A year before was 41. A 3-year average is down 7.33. So you take the last 4 years with this Biden administration, real estate was just a dead money. When the real estate is struggling with the higher rates, is gonna hurt the materials, because this sector right there benefit this one, right? Flat. So communication right there, that's what you have your Meta, Netflix, and Google, 35. Energy, flat. A year last year was down 4%. This year went flat. That's when we had the bear market of 57%. Well, I don't know. I mean, is was Trump is all about pumping oil and things like this. Is he going to boost energy? I don't think so. I don't think he's a big fan of high energy prices. Then it all comes down to the Saudis. They're according. I mean, the last OPEC meeting, as far as I remember, I don't think they're willing to cut down production until April. They have to cut production in order to boost the energy prices up, and um, they're not planning to do it until April. So what we're talking about, one more quarter, January, February, March, April. April, I think they're gonna have their next meeting, and that's when we start heading toward the summertime. And summer is when you know most of these prices goes up. Now remember that we used pretty much all of our oil reserves, right, from Louisiana. That's where we have those massive barrels. The tanks are sitting. So the prices had a pretty big spike because of the inflation and stuff. And then the war happened, and then everybody will start blaming Russia, like, oh, the oil prices, the impact is happening because of the oil, because of the war, this and this. And that is still going on. And but not on a very high scale like how it started. Now it kind of cool off. But there, everybody will start blaming the overall impact because of Putin, is because it's a lot. It's the exporter, the oil exporter to all the Europe, and that was the cause. But when you have such a high trending market, when you have an S&P over 25%, energy is just a bit more a defensive play. Yeah, it's not gonna, because you can look at this way, because when 2022, when markets sold off, energy was the one that rallied really hard, right? And then from here, last year, S&P was up 24%. Energy was down 4.5, 15% as well. And now this year, S&P is up 25%, energy is flat. You see? So if you're willing to make a bet on energy, you hope for the market to roll over. But at the same time, energy prices are not going to help much these companies, you know? So it's a little bit of a tricky um, sector, to be honest. But I don't know if it's flat, was down last year. If market is gonna roll over or something, energy can pop another 5, 6, 7, 10 points, 10%. I mean, it's possible, you know. But we'll see. I mean, to me, the only thing that I can think of is because we empty the reserve that we had here to push to bring the oil prices down, and now they're filling up those reserves big time, and they just kept these prices low as possible. So because oil trades mostly on a future contracts anyways, they locked up those prices at the lowest price possible, and there we are filling up those reserves. Yeah, that's what I tell you, fixed market. Um, Industrials are okay. Technology 23, consumer staples 10, real estate dead. Utilities 20. Utilities up quite a bit, and yeah, but if you look at like 3-year averages, like annual rate of return is healthcare dead money. Healthcare is just bad. You see, last 3 years, it's just I don't even know what the candy is gonna do. You know, I mean, I took a shot at that J&J just to pull like 2 points. That was just the 2 point was the ATR on that. That's how I was like, that's it. I'm out. I cut the trade. I'm not hoping for a 4, 5, 6 point move. It's like doesn't even show it. Um, I took a small shot at that one, but healthcare is just terrible. 3.58% in 2022, last a year before flat, this year flat, and now we're gonna have Kennedy. It's gonna come and punish these companies even more. I don't know what he's planning to do, but healthcare is just so you gotta have. I mean, you gotta data gives you a lot of hints. You have to study it, and you could because you're buying something because we're starting a new year now, and you always say like, okay, well, if we know where the market is at 25%, and does it can it go up? Of course it can. But if it does come down, what would be my choice of stocks that I would be willing to make a bet based on the performance of the sector? That's where you gotta have to think that way. You can't just sit and chase individual stocks. Okay, it's just very difficult just to pick a random stock and yeah, two guys posted something. The stock is going up, and I'm going to throw my money into it. It's just not how trading works or investing works. You have to sit and analyze price. You have to look at everything, you know, where you want to buy, what is the performance, what would I can expect, like what I'm seeing, what is right in front of me. Nobody knows the future. Future is not written. But if you do the work, meaning like look at making a wave count from me on any price is not a problem. But the fundamentals are important. You have to look at like what I'm seeing here, and and what I can expect if I'd be willing to buy certain stocks, the big ones, to see if it could drive the sector higher. If you wanted to go into an ETF by itself, that's different. You just want to buy real estate, XLRE, right at the price, that's different. but ETFs don't have a very high, beta. Like they don't move much. So you're gonna have to go with the top leaders. What drives the sector up? Not the little ones, the big ones, the ones that are gonna have the biggest market cap. They are the one who's gonna move the sector, not a $200 billion, the $200 million company or something. You know. So I have. That's what I. This is a screen that I spend a lot of time every day. Is this? I have these are all the top 10 stocks with the market weight on each sector. If I'm willing to make a bet on a sector that I think will be okay for the next quarter or two or three, I'm gonna have to work. That's what I do, is like I'm gonna work and see which stock that I can make a bet on to see if the sector will go, the stock will go. So like utilities and stuff is just, I mean, a lot of them are just not really looking good at the moment, and and we just gotta have to wait and see which looks good. I take the rotation to see, like these are all utility stocks. And these are all the top 10 companies with the market weight. I narrowed everything down. Then we have transportation here, the Union Pacific. Here's your technology. Look at Adobe. So bad. Oracle starting to move. That is something that we can look for. Electronic Arts. No, somebody was asking me about EA the other day. It's like, nah, the swings are down both on daily and weekly as well, because I can see this thing is in a lagging quadrant here anyways. Google is here. Rest of them are just all close to the benchmark. Here's your Microsoft, Salesforce, Meta. This is all here. These are all the daily rotation I look at on a daily basis every day. That's your John Deere right there. Caterpillar. There's GE. It's on the process industries right there. Lindy, that's a huge market cap company. The Sherwin Williams here, Air Product, Chemical, this Ecolab. I mean, I don't have anything else. I focus on the top leaders. Okay, I trade quality, not quantity. That's a difference. Non-energy ones. You see, like from the last 2 weeks, this is what I've been seeing every single day, and it refreshes in front of me in a real time. I was like, all of these rotations, and I just went through like 4 or 5 of them. You just most of these stocks, they all you see they're sitting in lagging quadrant, right? Here's the healthcare. This is why I took a shot here on that Johnson Johnson trade this week, whatever this week. Yeah, I was like, okay, see, at least we could get a little bit of a bounce. But the ATR is so damn low on this stock. You know, I was like hoping, because I run those fib levels and stuff, and when we closed, and I was like, okay, we're done. And we hit our target, and I was like, we're out. Just I don't know. I kind of if it's a 2 point ATR for the week, I'm not gonna sit and hope for like, oh, I can get a 6 points to the upside. That's like what, a three-standard deviation move. I mean, just Amgen, it's AbbVie, and it's your finance. You see, like everything just looks horrible. If I want like real estate wise, you gotta focus on two stocks: Crown Castle and American Tower. if you want to play a real estate for next year, okay? These are the two stocks. These two stocks are very rate sensitive, especially with yields. Yields goes up, these two stocks are going to get hit hard. And I've traded this year. Many of you know. These are the only two stocks that I trade. Crown Castle and American Tower. They have a lot of market cap. They're into that to that top 10. I don't touch any of the real estate, whatever the other builders and all that kind of just garbage. I'm leaders only. So I'm watching. I mean, watching. See, like it's just not gonna help. I mean, if this is starting to make a um, move to the upside, that would be. But these the damn 10 years is just what's going on here? It's so dark. It's just so. I mean, the yields are just not gonna help this much. I know that. Can do this, but it has to stop here somewhere. Right to this line would be the ideal. Technically, you can sit and make these bets. That's not a problem, you know? But this kind of a range right there, I mean, yeah, now you're looking for this move to go back up. Yes, if the rate if the 7 year backs off, yeah, this stock is gonna take off. I know that for sure. But any time and then the 10 year yield spikes, this thing like got hurt. This is gonna take a hit, So yeah, I like this stock, but it's just what I gotta what I watch those yields over. Same thing with Crown Castle here. You see, it's declining up, down, up, down. I mean, maybe we did few trades this year. Just this stock was what, $210, 990. That's a lot of market cap. What was that? Energy Minerals. See, they're all here. There's nothing like really looking, this is what I'm seeing for the last 2 weeks. So I just have to wait. Let me try to get. I spend a lot of time here on this screen every day. That's your Tesla here, non-consumer. Um, Here's your communication and commercial services. Here's your Visa and MasterCard. That's it. These are only, well, I narrow all all these stocks here in each sector right there. These are the leaders. So you want to go to a retail. Here comes your Target, Lowe's, Home Depot, TJX, Costco, Walmart, and Amazon. That's your retail. So I'll find something. But making a case here is good. But at the same time, look what your 11 sectors are doing. This. They're gonna improve. Healthcare is starting to move up now here, as of yesterday. Energy is quite a bit back here. I think you should buy something in energy in a week or two to see if we can get some upside. XOM. That's the leader. That's a top leader. Energy. ExxonMobil. But if you go here to the weekly time frame, look at this healthcare, real estate, materials, utilities. Here's industrial that are coming back here. And look where the technology is going. Look at the hook that's formed back here on energy. It's not bad. Market doesn't look bad on a weekly basis. But there are a lot of sectors here that I don't see for few weeks until I be starting to see some, like starting to form some hooks here. You just It's just everything flat basically. You see how it's just look at the curve of this one. Look at momentum in the 97 ratio 97. It's just real estate is just well because the rates are killing it. Look at material, same thing. This is why the sector is down. Not the year to date. Look how flat this thing is. And these are all the sectors we just looked at them. They're just flat year to date. You see what difference does it make when you sit and analyze the market and you look at which sector, like how the actual market looks behind the scenes instead of just like sitting and staring at these individual stock or this stock is up or this stock is down and this stock. But when you start looking at everything else, it's just gonna change your view way like differently. I mean, making bets on a stock from that moves from 2 3 points a day. I mean, if you are interested in the day trading part, that is different. And none of this stuff here matters. You know, if your mindset is into that quick cash like that mentality, like you wanna get in and get out and see if you can cash 2 points here, 3 points here, and 4 points here. And if you wanna adopt that style of trading, you know, you see, you think like this is the fastest way to make money in this business, but this is a complete wastage of time for you because I'm looking to invest more than I could, do all these gambling on a daily basis. So I have to sit and analyze and make up my decisions based on what I see on a screen. I take the data, look at the rotation, see what the momentum ratios and, what quadrant that I'm looking at from here. Then I go back to the chart, see how the swing looks like, see if I can, see if I would have some, if the swing is up or no, like if I had some sort of a signal that comes into along, then I can go into a wave count to see like, okay, now if I could get myself into this trade, what would be my upside projections based on the wave count? You see how many steps it gotta has to take from me to put 10, 15, 20 grand into these trades. I'm not just gonna blindly throw money because five guys on a Twitter has a chart that is going to the upside. I care less what everybody has to say about it. you know, I like to see things in my own and then I will make the decision. And is my decision is right or wrong? Well, time will tell. But but if if I have most if I see a lot of odds in my favor, then I have a much better chance making money, you know? So I know what works for me and and I just go from there. Um, you see some of these stocks that are looking pretty. So that's a strong one. Um, that's a complex. You got a three-wave decline here. You see, like now, if I have to go back on a motor wave and start labeling all this stuff, I can just look at a blank chart and I can just label right. I can just count them like this. You see how easy it is for me to do that? But that just saves me so much time. I don't need to label every damn thing, you know? It just it's a pretty it's a complete five-way move after a three-wave decline. So the if I have to look for support, I can just simply draw it like this. That's my resistance. Up on the top, that is my support right there. That's it. That's where the price is. So you can draw your support like this. Now you say that, well, I want to go a bit more in on technicals and or where I could find my best cute entry, and then you got to draw your fibs. You know, you draw from here to here and to here. You can do actually three of them. You can take the wave five to the prior wave four. That gives you a one swing fib support here. Oh, why is this thing all messed up? There you go. That's your one zone right there. And then if so, you should always look for first retracement from wave five high to wave four low. You can see if you break this 78.6 from here, then you take your fibs from wave 5 to your wave 2. Okay, so that will then you go down to this, get rid of this one, that becomes your other zone right there. Yeah, you always use every time if you think there is a 5 completed waves, you take the high of the fifth wave, project the run to the down to the fourth for now. Not you don't have to go that deep for now. You worry about that thing later. You just focus on this swing right there. Because a lot of time when the price makes a move, because this is a fifth wave. Fifth waves are the trend waves. So the correction whatever is gonna come here is gonna find support somewhere here is gonna give you that bounce. Now if the correction is gonna get deeper, is gonna get even more, it's gonna have to break that 78.6 from this wave five to wave four. That 78.6 is gonna start giving is gonna have a larger retracement. Then you will know for sure there's gonna be a big counter move coming against the five trend wave that you have to the upside. That's how you can find support to the downside. But you don't have to open up too much to the downside. I mean, you can lay it out there on a chart, but that's just relevant. But then from there you can say like, okay, well, if the price is here, then I can see like, okay, what would be my what would be my one standard deviation? Oh, 3 points. Okay, well, I should find support somewhere within a 3 point range, right? ATR is 3.65. Stock is at 139. Stock moves in an average of roughly 4 points, give or take. So you have a long way to go for this price to come this much down to run these kind of a um, downside retracement. For just for now, you can just focus on this part. That's it. It's like every other stock, the same thing. Um, Look a couple wave curves and should be good. MSTR, looking at a second wave two. This lines up with the daily 1-2 count as well. I would rather just leave it like this. 333 is the 3-year high. Remember that, right? So this stock has moved from that 333 when it took out that 3-year high, went to 543. Looks like a three-wave decline. You see, it has a lot of overlap. You know, there's a lot of support sitting here. Um, I put up a time here to see if it could. It's testing 326 right now, which is this 61.8 right there. So it's right there at at the moment. And I just wanted to see if it could stays here because it's gonna, as you can, it's the close at 330. You can see the price is coming down, bouncing back up, coming back down. It is fighting the zone, right? So there's a, but the rotation damn is looking too damn weak, and coin in this one. So I'm a buyer 100%, on the weakness. But I haven't bought anything yet, but uh, I'm just gonna watch. It's a pretty wide channel as well, from this low to this high, and that's where the price is right there, pretty much. I think is in the middle. Yeah, right there, middle. It's trying to keep this. If the price managed to stay above this middle line, that would be good. But this price here, you see this just back and forth, back and forth, back and forth. So it's because it is fighting this 3-year high. That was this major support the stock had. So it's a good pick for next year. If you believe on Sailor, that is wild. MSTR is fine. So next year is good. Gold is looks fine. Um I I think this is some sort of a triangle here. Um this is an extended fifth wave from this leading diagonal here in wave one. As you wave one, down in two, up in three, four triangle. This is extended fifth. The extended fifth now is going to have a pretty well-defined invalidation here for this thing to complete. So you're going to have one here, down in two, up in three. That's your 200% retracement. Sorry, the 300% upside, the three versus one. And then from here, the price is just kind of going sideways. Even the fact that the dollar is so, like, the dollar has made a quite a bit of a push, as you all know, to the upside. But look how steady the gold is. Gold is just literally going sideways. The currencies are getting hit, on the forex market. But gold just managed to say, like, okay, whatever, gold, the dollar is making a move, but it's really not uh, pushing the gold down. So we can make a case here for this triangle, down in A, up in B, C, D, and then another E, and then from here, if it managed to hold, Okay, I have this zone right there. I have 100% right there, 38.2 and 58, 50% retracement. It's as long as this, I don't know if it's gonna be a triangle as long as it managed to hold. If it's not, then it could be a WXY. We can make a case here, but the point is that as long as this gold can hold this yellow zone, and then from there it could make a push to the upside. In order to make a push to the upside, it needs to break this 252. Again, remember the 78.6. So that will open up 257 is the all-time high. That toward 127, 1618. That would gives it this fifth push to the upside. Now, if the goal fails below this invalidation mark, then what we gotta have to do is move this three up here. And then we gotta have to deal with this fourth wave. Okay, that will pair with this second wave too. Okay, I'm not gonna move it like this because one has to confirm the other. So that's the risk is to the downside. If this extended fifth wave that we have now from this wave four is going to be extended anyways because your wave one was a leading diagonal. If this one managed to hold, you have one, two, up and three, some sort of a triangle or a complex, as long as it can manage to hold this yellow zone, it could give one more push back to the upside. Okay, so that's the bet number one. If this thing goes against, okay, and if the price managed to dip below the invalidation mark, then it means that this wave three is going to end here, okay, and this four will come into a play. This four right there is going to pair up with this for some time. You see, like this one was from May 11 until October. It's a long time. Okay, it's a long time for this, but who knows how the gold will go. I mean, if I would make a case for a gold, is I would really would love to see this push to the upside. This way we can make more room, and then for this four to consolidate, whichever way it's gonna do for another a quarter or two, you know, into the summer and stuff. And then from there we can take this fifth back to the upside. It's a very clean wave count. Very clean wave count. I really like this. This is how Elliott's supposed to work. You know, like you know exactly like how the wave. Like the thing is this because the three versus one taking uh, this wave one and down in two. The three versus one, 161.8 is at 248. 200% is 271. Remember, the third wave can go. Well, this is what I am looking for now is to see if we can get toward this push to the upside based on this. So I got 200 sitting here, but it needs to break this this one right there, 78.6 to make a higher high, and then 127 toward here. That would be the ideal push to the upside as long as we can manage to hold here. So gold looks good. Then we gotta have to, I don't know where this can stop here, whatever, but there's no point for me to run anything down to the downside yet until I see there's a reason for it. There is none. Let's leave the way it is for now. Um, Tesla. Look, the thing is this that rotation started to roll over. Okay. And To make a bull case for a Tesla is if you have a completed five waves to the upside, you have to the Tesla will or a price should retreat at least 23.6%. Okay. And it doesn't matter like where you count. I mean, if you do this, that's a three-way move, and that's five. So if you put your one here, you can't, this part right there has not even retraced 23.6. This is four, not two. So this one doesn't fit here at all. You can't have this monster move and then make this thing as your two, and then you say like this is one and this is some sort of a two, and now you're looking for this third to the upside of that third. Is no, I wouldn't accept it. It's very shallow. You cannot have a wave two that doesn't even retrace 23.6 of the entire trend move. You gotta, if you don't have that retracement, it means it's still an ongoing, like you're gonna have the extended fifth. I was debating because I have them both. I think I did. So I have a wave four here at two, what is that, 325. And this one I kept them here, 313. Okay. Now here's the thing though. Here's your wave one down into up in three. That's a three versus one, right? It's almost a textbook print. There's your wave four. This is your extended wave five as one, two, three. This is some sort of a four. Okay. And that gives you a one more push to the upside. Case number one. Second is if I move this four here like this is a completed five-way move. Now we're looking for this wave two to the downside. This is what I had. This is how I laid it out. The reason why I laid this one out is because it's just because the rotation right now is weakening. If I would have had a lagging quadrant that is going toward the improving quadrant that time, I would have made a case here. It can still play out. Okay. It could still play, it could still play out like this. If this is the case, that will be a one more push to the upside, and then you're gonna have to deal with this wave too. I hope you get my point. I don't know, because it is all about the both wave cards are fine. Either I put a four here or I keep it here. I had them both, so I'm looking at both ways. So ratios fits, uh, on 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 both sides the perfect way. I'm not denying that. But to me, I'm kind of favored. I'd rather deal with this now, unless Nvidia is just gonna, sorry, the Tesla is gonna just give this push to the upside and then do the rug pull on everyone for wave for the two. Tesla always does that. It's gonna just squeeze everybody, like, bring everybody to the downside, and it's gonna pull the rug to the upside. And same thing is gonna get all the buyers to the upside and just pull the rug to the downside. So this is okay as well. You see, like Tesla works good. You just need to have a right wave count. Like once you will have a good wave count in your hand, you can kill the stock really good. But it's just it bounce around so much. So it makes it a little bit challenging um to to see like which way this thing is gonna go. I mean, if I do this, like wave one down and two, like if your three versus one, 161, 200, and 261 point, that's the extreme it's gonna go. You're not breaking 261.8 without any sort of a setback. You know, I mean, I backed off here to this 415. That's where the 418 is. Bit of a bounce, sold off again. So we'll see. I mean, I could, we could take a shot at, um, see if we can try to, but that I have to think this that I have to look at this two ways. One thing is that if this would be the upside move like this. Okay. That's the upside move right there. See how Tesla gives you these prints almost to the penny. See 425.84, the low was 426.50. You can't beat that. It's just a matter of like get a to have a right wave count in hand. It's gonna give you those penny reversals. I can I can guarantee. I've spent a lot of time on studying this chart, um, because there are a lot of charts, the wave count that I can tell you that works really good with fibs, you know, really good. And those are the ones that you always wanted to more, pay more attention, because those are the ones that are always going to give you a much better clean looking wave counts. And you want to make sure your wave count has to have a right look as well. So that's very, very important. So if this is the case, okay, of a Tesla to making a case here for a 1-2, then the stop goes here at 415.41. So you're risking 431, okay, at the closing price down to 415. That's a 16-point risk. And Tesla premiums are not cheap either. So the only way you're going to hit this thing is you got to trade spreads, you know? So you take a 16-point risk to the downside to see if Tesla can manage to get above this 466 mark. I mean, for risk point of view, I mean it's a there is a bet that we can make, right? I mean, you're risking 16 points to the downside against 35 to the upside. I mean, the risk to reward is very attractive. There's no doubt. Okay, so you have 16-point risk to the downside to make 35 points to the upside if it goes as a 1-2. Now that would be based on, I believe that they have a delivery numbers are coming up, right? So that is one case. Second is this, that if this is an ABC, okay, And then we gotta have to look for this decline that is gonna has to come toward. I set up a time here around like, whoa, December. It's gonna change over the weekend because it calculates the weekend time as well. Um, because the time is, you see right there on the bottom right corner, right, the bottom right, you see the time is running. So that time, because I'm logged in, the market is closed now. So the clock is always running here. And then when I set time here, and then on a Monday, then I'm gonna have to adjust the time, you know? So it's just a bit of a too advanced software, to be honest. Um, because I'm doing work right now, even the market is closed, and then when you set up your time and stuff, and the same time the clock is still running, but the market is closed. So it could move a little bit more, which is fine. So if this case right there, now this thing right there, I can count this thing as a diagonal, okay? Five down, three up, that failed again, right to that 78.6 we always talk about. And then we backed off. And now from here, we're just trying to see there's a lot of support sitting here, to be honest. I don't know how Tesla is going to slice through this support without any sort of a bounce, you know? So the top played out good. Um, this is a November 4, 2020. That's a 3-year high, which is 414.15. I mean, 415.41 was the low here. And that's a what 3-year high that was that broke here. Bit of a breakout here, retested right there, 415. 415 shot up all the way to 488. Then 488 reversed all the way back down to 415. You can see right there we have two tests so far. It's the same thing what MSTR is doing right now. Is fighting the 3-year high. So does the Tesla right now, you know? So these two stocks, you just gotta have to pay attention to it. Okay. So these are your major support line because those are your tests where your, um, you know, a stock like say like MSTR went from 333 down to 97 pennies. Okay. So, I mean, it could move around there in few points because the spread is so wide, you know? So it's okay. I mean, but as the price is gonna fight that area pretty hard, as I can tell you that. So that is a good area to start something, consider to buy something to the upside. Now, the thing is this that the 23.6 is a 401, and against this five wave completed to the upside. It's one, two, three, four, five. This is the minimum downside, which is 401. So now if we take this decline, the first initial decline, which is I had them as a diagonal, up in B, you see to the downside, which is the two equal measured move at 396. At 396, that lines up with 401. 401, you have 127 exchanges sitting here as well. You see, I mean, this is gonna be hell of a area to load up some calls, you know, right at the, pretty much right at the money of the 400 test, if this comes into a play for this wave count. Because eh, if it doesn't come down here toward this 23.6, that's the minimum. I actually put alternate A here. What if this is just a B? Correct. Now, keep in mind that Corrections are very tricky. They're very subjective. You can't just say like, oh, you just had this much of a move and three-way down and you going back to the moon. No, it doesn't work this way. Okay, so I put alternate A here. What if this is only a three-way move? Then you got a three-way bounce. Then you get a C-way decline. The C can come all the way down here as well. Okay, so just remember that. I mean, none of these corrections are completed unless you make a higher high. You basically what you're looking for in this wave count is this is your high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. You see? The trend is to the upside. There is no denial there at all. The price is making higher highs and higher lows. This is a basic one-on-one price action, price bull trend on any stock that you trade. Okay, you want to see the price to make higher highs and higher lows. Now, if you're bearish and you're looking for a downside, now you're looking for lower highs and lower lows. Okay, same thing like this. Lower highs, lower lows, lower highs, lower lows. It's just the way the bearish trend continues to the downside. So the trend is up. They're just not, but it's just a matter of like how long or how is this thing's gonna play out. Well, we don't know that yet until it cracks this. It always like this. And remember, everybody was chasing one number at 500, right? Look where they stopped the price, 488, and backs off. You see, that everybody wants that 500 number. See, you're not gonna get it. How many times, like everybody was after 100,000 on a Bitcoin for so long. Bitcoin went up to what, 98, I believe, 97, 90, and they just pull it back. And then after weeks, they made an attempt and finally went to 100,000 and higher. You remember that? It's just, it's just the way they they know, you know, and that was here, I believe. What's this 100 mark up till here? You see, it went up to like 99.99777. Didn't really hit the 100 mark, right? And look at the dip, 9% drop. And then finally, after days after day, this is the daily chart. And then one, two, three, four. For that, it just took one, two, three, four, five, six, seven, eight, nine. It took 9 more days. And then it finally made an attempt to clear that 100,000 mark. And that's when everybody like, oh, Bitcoin is at 100,000, you know? It's always like this, you know, never chase that number that everybody's after. You have a very, very good chance, I think, like like stock like Tesla and like, you know, is going to fall 10, 15 points below that. Because because if you do this, I made a case here by keeping a four here is to see how this thing is gonna get clear. It's like I don't think so. I don't normally put red boxes, as you guys know that on a wave count. I don't. There are gonna be some wave counts that you will come across that you will end up seeing those red boxes. If I do put a red box, you just gotta have to pay a very good attention to it. There's gonna be a very good chance the price is gonna reverse from there. Okay. So I normally use yellow boxes. Yellow boxes is my support zone, is where I would be looking for entries. Greens are the ones that I target to the upside. So these are the three boxes that I use right there. That's what you see. Green, yellow is always considered like a cautious sign. I use them, you know. So, the color. Red is just, you know, okay, our party is about to come into an end. And then the green is the one that I am always after. So these are the three um, colored boxes that I use. So, I mean, risking this one, keeping this here, this is it's a 16-point risk here to see if the price can go right back to 466 high. It happened. If this has one final push to the upside, so we have 466.50 here, 488.54 was the previous high. Then we'll look for a new higher high. That will take us into that 510, could be 532, 551 to 540. So it could go into the complete five smaller waves is to complete this fifth five brown, sorry, the fifth wave of this, the brown one, is to have five completed waves within this wave five. So that will complete this um, five-way move like this. So you have 2 to 4 channel projected with 5. That gives you that upside. That is one case. And if it comes back down, now we're looking at this. So this one right there, well, I don't know where this thing, and then you're gonna have to look for the same 23.6. That will, I don't know where it's gonna, because it could move. You see, I don't know where this thing is gonna end. So there's no point for you to sit and make your downside projections because you don't know where the top is because your bottom is gonna move. And you don't do that because there's no point for doing it, and it's gonna cost you money because you don't know where the high is anyway. So that's the story on Tesla. Um, Meta, I'm watching. I was debating yesterday, should I take a, these corrections are so damn subjective. Um, I might take a shot at this on Monday, um, of Meta to see if he can play this C wave move to the upside. That would be, again, corrections are not easy to trade. Meta is another good one that trades really good. This is, remember, we had post triangle completed from here. We had wave one, down in two, up in three. That was that 100% relationship. Sideways, long fourth wave. Got A, B, diagonal C. And then from here, we made a high all the way back up. And now what Meta is doing, take this high, which was a 602 right there, as a support right there. I mean, it didn't made a low all the way down to 580. And now it just it's trying to, it's something with that 600 mark. I can see like how the prices keep coming back and back over toward the 600 mark, you know? So if this is a completed five-way move, look at that upside here, man. How can you beat this? How can you beat this? And these are, none of this thing will work if you don't know how to count right, because wrong labeling can it cost you a lot of money to pay attention to it, how you label your wave count. Because any ratio can, you see how it changes? Depends where because these low high and lows are different. Somebody was asking me about those S1 R1s and all those the morning those the levels that I post them. Yeah, those are only for good for one day because those are all based on yesterday high and low close. Yeah, you don't mix those ones with uh with uh with these wave counts because these wave counts have different high and lows. Okay, you don't make those are just your intraday price action. As you know, I post them in the morning and I deleted them and I delete them at the end of the day. Yeah, I would never keep them for the next day because you people um, sitting and watching that thing. I was like, okay, no, it could cost you some crazy money. No, those are just, you have a pivot there, you have an S1, S2, S3, R1, R2, and R3. But always use a 9 and 20 EMA on a 15-minute chart, okay, for the day. And you take those levels and you just use a 9 and 20. Yeah, 20 makes the trend. 9 is the one that is going to act as a support and resistance, depends which way the 20 breaks. Okay. 20 is very good moving average in a 15-minute time frame based on a very short time frame trend. You don't define trend. If a trend can be defined on multiple time frames. Okay. A trend can broken on a 15-10 minute chart doesn't mean the overall the the chart is it went to a went to like the whole thing got changed or something. No, it doesn't work that way. And you just only wanted to fight a 10-15 minute time frame, it doesn't mean your 1 hour wave count is gonna you're gonna have only gonna have 6 bars here anyways. So anyways, 5 completed waves here. Same story with Tesla. Again, you're gonna have these counter trend moves. You know, I mean, if this is an A, you can label this thing as an look, this is fine. Here you got an A, B, C move here. You can do this. Color this thing as a green. And then within a three, you can find 1, 2, 3, 4, 5. You can do this. You make this thing a little bit too dark. See, now you have 1, 2, 3, 4, 5. That's a very sort of like a clean 5-wave decline here. That should gives you a 3-way bounce to the upside. I was looking yesterday and I was like, "This is fine, just not gonna, I'll just wait till Monday." I'll try to see if we could play this C wave to back to the upside. So if we take this low, which is 580 up to 608 down to 589, 100% is at 618. So 618, 61.8 is at 615. So that would be the upside shot on Meta um, from here. If it does like an ABC move back to the upside in a B wave. B wave typically retrace like goes up to 50%, which already happened here. That's the always a tricky part. But you're allowed now because when you have a first initial decline, if you make a counter trend move, B wave typical stoppage point is always 50%. But for but now you says like, okay, if this is gonna be a one and if it can get two and it can get one more push back to the upside, and then you can make a case of an ABC against your trend wave, right? Because this is a trend wave. This is the counter trend. This is the one that moves against this one. So if it doesn't go back to the 608.14 and if it just roll over here, then it means that this was the B and now you're looking for the decline down in C, you know? So in this case right there, you're looking at 78.6, which is this invalidation. You know what happens when you break 78.6. It's going to take out this low. So now we have to look at the risk reward, okay, to see what it makes sense to make a bet on it or not. So we have 599 minus 586. That's a 13-point risk to the upside. And then you take 599 to 615, just to call it like this. 615 minus 599, that's 16. You see, that's just um you're risking this is like a 50-50 shot. 50% risk to the downside and 50% risk, like it's a 50-50 shot from here. It's not attractive risk reward, if you really ask me, you know? I mean, 50-50 odds for a trade is just, I'm not a very big fan. I mean, I'd rather risk 1x to make 2x. That's the best risk to reward. So, meaning that risking 15 to the downside, like 30 to the upside. That is 1 to 2 risk reward. Yeah, 1 to 1 is always going to be 50-50. It's not just not attractive. You're just thinking like, okay, can I hit 50 more or I'm just going to get killed with 50? At least you have more room here. So when you have two odds, like two up, to go, it's going to be much easier to at least hit one. So if you even get the 50% out of your 100% target, still a 50% return. I mean, is it good? Of course it is good. Any 50% return on any trade is an excellent return. It just all depends how you size up your trade. That's a different thing. 50% return is excellent return. I'll take it all day long. I try to take a 35% probability delta trades, on options and stuff. So I think 35% is a very good probability on any option strike price. Anything you trade, 35 is a very good one. I wouldn't go down to 20, 25 and all the other ones. Those are just no. 40, 35. I mean, yeah, premiums get expensive because you're getting closer to the money, but 35 is my favorite. I'd see a 35 as a much better, it's a good probability. Um, so this is this. I mean, I don't know. Daily and weekly, it's the same thing. I can change this thing into a day. There you go. Yeah, I do the same. You see right there? Yeah, I can go back here 2 weeks. Yeah, when you ask those, some of these as a monthly, it doesn't matter. I can just change the time from the bottom. This is the beauty of the software is that I make a wave count on a bigger time frame and then I'll just bring them down into a smaller time frame by just clicking on the bottom right there. It's not going to change anything because your price is price where it is right now. But now I wanted to see go into 800 and stuff. Yeah, we'll get there in a couple of years. But you need to see the same thing. Like, okay, like if we do daily here, let's see, what the heck are we? So 15. So 1 week is 34 ATR for a week. And now if we go to a month, 68. I mean, stock is definitely trending. As you can see, the ATR is just on the rise, big time. That's 1 month. So if you take 68 from 1 month, that gives you 668 price based on a 1 month time frame, right? So from 600 UR, one standard deviation move is 668. So is it worth it to buy 700 calls? No. You're buying something way out of one standard deviation move. Why would you even do that? This is why if you look at the option chain, and this is where the 35% delta that that's what I've been talking about, is what you consider is where your chance of 65 points either to the upside or 68 points to the downside. Okay, it's plus or minus. It's an average to range. It's been rising. That's what the trend is up, to the uptrend. So for me, this is the reason that I never run those wild upside projections like the rest of the world. There's no point for it. You just why? Because it looks good. I mean, if you wanted to look at that way, that's different. Some of these labels are moved a lot. Doesn't go here. Um, like showing these big numbers there, like, okay, I want to do um three versus 1,000. Why? Because it looks good on a chart, so I can just lay out 1,034. I mean, you have to be a little bit more realistic. You can't do stuff like this. Stock is at 600, you're looking at 1,034. So you're looking at what? 78% upside. A 1 month the stock moves only 68 points. I mean, I'm not saying that the meta cannot go up to 74% for the year. It can, but it's a long way to go. So if you just for 1 month trade, I mean, if you buy something for let's say a 1 quarter, 3 months out on time, if you can structure your trade based on one and a half standard deviation move, that's that's the way to do it. Don't worry about the upside. I'll open upside for you on any chart. That's not a problem for me. But I'm not gonna entertain the word. Oh, I have this because what happens is that once you see it, it's just like, and then you just start believing it. Like, okay, yeah, we just, I don't give that kind of a big high hopes. It's just got to be a little bit more realistic. It's the same thing. It really doesn't matter. I'm here. I'm on 6 hours now, so yeah, bigger time frame, smaller time frame. It really doesn't make any difference. I can run the same 1 hour wave count. I can take you all the way back up here. It's the same thing. So just focus on a 1 hour time frame. It's more than enough for you to trade any swing trades just based on a 1 hour time frame. Wave count works really good. It is the best time frame for a swing traders who's willing to stay in a trade for some time and looking for a trade to play out either, in their favor or it's gonna go against you. So 1 hour is a very good time frame for you to trade. If you sit in and I want to catch 2 points here and 3 points here, you're gonna go into that 5 to 10 minute time frame. There you're gonna uh, play those. Market comes back down here. I wanted to scalp, few points here. Yeah, if you want to do this, you can do there. And this is not for scalping, this time frame. And this is on, then you gotta go into the linear chart as well, not a log scale. This is on a log scale. See semi-log scale on the bottom? Day traders are they the day trading is done on a linear charts. Yeah, swing traders, you look at a log scale, a much bigger time frame. It's only 6 bars for the day. You have to look at it this way, right? One session is 6.5 hours. You got a 1 hour, meaning what? You're gonna have 6 bars. My favorite is this one, 195. This. Most of the time when I look at wave counts, I look at this at half day. Just 2 bars. Said the day is over. Every single day you get 2 bars. Exactly 2 bars. That's why this is my favorite. This is my favorite time frame when it comes to Elliott and just to 195-minute chart. You can run this for. It could work for you for at least one good quarter for sure. Let's take a time from here. So we are in December, right? You have December, here's your November, here's your October. October, November, December. See? Even it goes even more. You can actually fit like close to 2 quarters on a 195-minute chart. It's a very good time frame if you are even in a trade or if you just like buying leaps or something for the next 2 quarters to play out, for your leap to play out. 195 minutes is the ideal best time frame for you, you know. I haven't changed. I mean, I have I have them here as well. I just changed some of these customize this. I did 195 minutes. 2 days, there's 2 bars. Change it like this. You can just customize this. You can just put 190. Oh, well, you don't have this. You just put 195 here, add here, it's gonna add it here. Hit okay, that's it. Now you got, I don't even change. I don't know what's the point to even have this. 1 minute. So here's your half day chart. 195 minutes. Man, look at this. Crazy. It's a very good time frame. Try it for a couple months. You will see the difference. Because when you like, this is 195 minutes, right? Like, it's probably working after hours. 2 bars for the day. And then as soon as you're going to go down here to a 50 minute, look at this. The world is coming to an end now. You know, you just 1 hour, okay, that gives you like yesterday, like 1, 2, 3, 4, like 4 hours, like 6 bars. I don't know what the low was. Can't even see anything here. And then when you're going to go to this 5 minute chart, is where you're going to see all this noise. So this is 590 here. Like you can do all this, but there you're going to have to get yourself out of the log scale. Now you got to go to this linear chart, so this is different. Um, Look at this one. This is a 3 bar swing. I mean, the market has, this was the last week sell off. We're going to talk about the S&P and Qs, and I'm going to be done. Um, this is a last week sell off. This is the all time high, 6,090, 6,100. Call it, I've rounded off, 6,100 down to 58.32, 4.4%. This swing from here rallied all the way back up to 3.7. This 60,042 is 78.6. Remember the other day when I was showing you a wave count, I said, like, this is a sticky zone, right? And then yesterday, that's where we backed off. Sorry, the yesterday, a day before was after Christmas, was a 1 point session close. That was this bar right there. This was yesterday bar. And now you're gonna have to look at this. Look, we have a downside risk. Okay, we do. And in order, but what we need now is what? We need a higher high. How are we gonna make a higher high? Need to break this. Okay. Remember, we always talk about 78.6, right? 78.6 is your last resort. Need to break this. If price break this, there you're gonna make your higher high to break above 6,100. Okay. Case number one. Second is this pattern now is looming. Shoulder, head, shoulder. If price, if this comes and we don't get here, and we keep, and there is more weakness in play, this can play out as well. So we're not very right into the year end. January is gonna be a little choppy and tricky because just I don't like this 4.5% decline. That makes it one of the largest swing that S&P cash had for quite some time. So you gotta have to be pay attention to this swing. You see how red line is? So what we and I will be watching is this. If price reverse, take out this high, it's gonna invalidate this pattern, right? Because we need to break that 78.6. Still got room to go now. That is gonna take another day or two. I mean, I don't know if you remember a couple days ago, I said, I was like, I don't know, I just see S&P ending the year by around like 6,000. That's how I see it. Gonna be wrong. That's how I see it. Just S&P might end the year right on the 6,000 mark. That's where we'll start the new year. The new year, that will give us 100 point to the upside to make a higher high. And then we'll see how are we gonna do this. If we're gonna make a case for this, we need Mag 7 to roll over. That's it. Okay. So it's a very sideway kind of looking market for now to me. Because it's just these swings you can see is doing like 2.7, 4.2, 4.4, 3.7. You see, like it's market's trying to go range bound now. I don't know this further. fake volatility is coming into a play for no reason because there's no catalyst yesterday and it was a low volume day and market just took this beating yesterday. So this is the view based on a swing. I mean, I actually posted this thing on Twitter as well because I know a lot of people along this market because everybody thought like the Santa is gonna come, is gonna, you know, bring us presents. But that asshole is just willing to take all our money back, and I just I just see if I hope um I don't know. I mean, it's the 2 days. Well, I wouldn't even say 2 days. We have a day and a half left. I would say just to call to end the year. Um, and then it just, yeah, that's why there's no volume. I can see it. So I don't know. I mean, there is a downside risk. You should know. I mean, whatever. If it's down here, fine. I mean, it's just a matter of I cannot um, measure anything to the downside yet unless we take out this low. To be honest, there's no point to. Um, I'll show you what would be the expected measured move by running from two different swings to see what the downside move would look like and see if we can buy something down there. But making a bet from here now, either we're right there at 59.70, either we can track, we could take this fib. This is 78.6. Remember how we failed? Look at that. And that will be the ideal move. And if the price will starting to go reverse, I don't think it's going to happen a day or two. You still need a couple daily bars, starting to see more weakness across the board, and then from there to see if we have to take out this low, and this low, and then you have 4.4, 3.7. Then you have to look for another 4.4% from here, which I'll do it. I don't have to run anything right now. So what I'm watching for now is this and this, and we're just let's see what happens here. Okay. So this will invalidate this pattern. We need to get out of this pattern. We don't want this, to be honest. It's gonna, it can pressure the downside. So that's this. IWM round bottom, double top. Okay. Now there's two ways this thing goes. Either a 3-year high. You see like how much the market is just Tesla 3-year high, MSTR 3-year high, IWM 3-year high. Like all of these things are just like making these U-shaped recovery, like U-shaped returns, but going right back to those previous highs. So IWM, same thing. 3-year high went all the way down, bear market, went sideways, finally managed to went back up, may put a double top, failed. Now the double top, there's two ways it goes. Okay, if this is a double top, price retraces here, find his support, make his way back out. It's gonna crack. It's just a matter of when it's gonna crack. Okay, I'm gonna stay long. The worst case is this: that if I'm long, if I go from here, I'm good. Okay, a double top can be just go with a round bottom up as well. The second scenario is that it can form a handle. Okay, now keep in mind this is a weekly bars. 1 week, one bar. So it could take a quarter to two and a half quarters worth of time back and forth is to form like a handle. The handle typically, when you have a cup and handle, typically retraces 50% of the entire cup. Okay. So it doesn't matter what that if it goes from here like this, the way I had it laid it out as the green, or it goes down here toward this 38.2 and 50% retracement into this zone, and then from here it goes. Okay. So you have 222 down to like 205. So you're like roughly talking about like 17-ish points. Okay. 17, give or take, 17, 18 points. You have a 17, 18 point kind of like to for for the price to form a handle or a support where it finds. But then your upside is pretty big. Those upside right there stays as is. It doesn't matter. It forms a handle here if it goes up as a double top. These prints right there will stay as is for next year. These are my next year upside. This is the easier one to figure out from here. I'll wait for those S&P and NDX when I'm gonna watch the close. This is the easiest one for next year. IWM. Okay, so I'm long. I believe. I know what I went. What is my entry on this? I bought two leaps and I'm gonna even buy more. 183. So I'm at 183, which is right here, right there. So this is what I'm in. I'm gonna stay in. That's my entry right there. I have a lot of, it's okay. Patience. So what's the year high on this one? Wow. Yeah. At 183, 183.37, March 8th. March 8th. Why is it showing December? Man, something. No. I mess up the date here. 15/8/23. Oh, you're right. 23. Why it shows December at 183? Probably put a wrong date over there. Because this year low was 187.53. 183.39. Hang on. Worksheet. This is a yearly bar. Okay, so the high is 244. The low is 187.53. That's the high and low for this year. Wait a second. 'Cause I just bought two leaps for 21st November for next year, 2025. That is December 18th. I gotta look back. I think I messed up the date on my logbook here. 50, I know. 183.37. 183. It actually comes here. How does that work? I'm confused now. I'm gonna look it up on my on Thinkorswim. It's gonna have the exact date, exactly when I bought those. Okay. I went right here on Slack on the signal alert because now it doesn't show the messages went old. Yeah, I gotta check my statement. Um, that will give me exact date and time. So this is a double top right there. Um, it depends if it goes like this or it forms a handle. But if the market's gonna take a punishment, well, that's the case. I mean, or if these rates are just gonna s- stay there are, or I don't know where they're going, and then this. Yeah, I got two here, and if this is, I'm gonna pick two more here. I'm gonna pick two more here. Well, all the dip I'm gonna buy if this thing gonna form this next year. We're gonna crack this. Well, rate's gonna back off. This thing is gonna take off right away. So we'll see what happens. This is gonna be a very good buying zone, but if this thing comes this way, but swing is up. Um, it might just because we're into this IWM looking pretty badass to be honest. Because IWM on daily um, and weekly is it's showing to the downs as it goes to the 1-2, and if we go into a daily, it's already in 1-2. So the weekly has a little bit more room to go. That's why I wanted to leave some room to the downside. You see, like this one has a failed swing. Here you made a double top. There you're down in two. And now if the swing time turn up, this thing can go. Okay. IWM can go. If this two starting to extend a bit more, and then we have this is still showing one as a swing count. So you can come right around to the it can adjust. It could form this handle. It doesn't matter. That's what I say. Regardless, but it's just this thing is gonna go. I'm I'm bullish small caps. Definitely buy dips. Like two here, two more here. Just November, December next year. You know that'll that'll that would average the entries really good as well over time. So just leave it, let it work. Um, McDonald is got in, got a bit of a pop here, kind of backed off. He's got this weave up right there. You see, it got a smack right there, backed off. Then it came yesterday, got a bit of a pop right. Then the market starts selling off. Kind of back, kind of like it. We'll see. Kind of give a go and a few more days and see how it goes. It just has, it's always like this damn weave up, it's just, sometimes I hate it so much. It just put a pause on your upside pretty, it works well. I mean, it works good. You kind of expect like, okay, where I would expect my, upside resistance. So I had them, I can adjust it. When I made this thing, I just put a little right below this 200. This is the 200 EMA, the red line, this thing right there. So this is the 200 EMA, and I was like, okay, if I could, the risk reward looks good. I was like, if we can just, it's a nice inverted head and shoulder pattern, So you got a shoulder here, head here, shoulder here. Here's your neckline. That's your trend line. That's your weave up. I was like, if we can make a push here out to the webs, to the upside, I mean, risk to reward is pretty good. We'll see. We'll give a few days and see how it plays out. It's going to just say like, okay, I'm gonna just use them right below. I mean, you're gonna break this 200. I mean, gonna it's gonna be in trouble. So Big Mac got some work to do. See if market can bounce or recover a bit, can make a make a move to the upside. Oh, that's a scatter plot. Have you guys ever seen scatter plots? Kind of some crazy stuff. For all the Mag 7, Tesla, and all that. The scatter plot is like you can put all these stocks into the scatter. And then it has this
Yeah,
X.
very interesting.
Yeah, it's a 3D view of all the Mag 7s. So you can set up. You can actually look for these. It has these X, Y, and Z axis, and just it's well, X you can set up as an RSI. Y you can do an MA over. You can do a crossover on those moving averages when like the price moves above 9 and 20. Z you can this statistics, and you can set up any MACD if you like. You can set up like two or three and set up it has, we can do a year to date, and I don't know, the year to date, 1 day return, tails, how big of a tail do you want? What is the ideal? What is good? Make a little bit bigger. So basically what it is, the stock that has bigger and bigger bubble are the ones that is gonna is the one is gonna move. So you can just, that's your RSI right there. If you want to see which one is, keep it like this. See if the stock sells off, go below the RSI. So now if you wanted to see this statistics, then you have moving average. This is some crazy stuff. Here's your MA crossover right there. Um, Rotation right there. Um, Looks, I mean, you see IWM here. IWM is gonna move. It just needs to it's the damn rates. Um, Dollar 108 as your S&P. I don't think dollar is a threat to the market, to be honest. I just don't. This dollar has this dip. Keep that thing in mind. From 114 down to 99. And now it's just up, down, up, down, up. That's your resistance right there. It's connected to support. It's kind of failed, backed off. So it's gonna roll over because if you go here, where's my forex? This, I haven't showed you this one. So give another couple weeks. Dollar's gonna roll over. You see all these currencies are here in the lagging quadrant in the weekly and in the daily. You think it's gonna happen? They're gonna improve. Dollar's gonna roll over. Okay, give a couple more days. Yen is weaker. Kiwi, Australian, Swiss franc, Canadian, loonie, British pound, euro, Chinese yuan. Yeah, dollar definitely has strength for sure. Well, you just saw it. It's gonna put all these currencies down. But they're all here. They're gonna make a move back up, and then dollar will back off. What I was gonna show. So we saw the swing. Here's the wave count. Same thing. I mean, I'm not making those head and shoulder part here. I don't need to. Um, August lows, 51.19, wave one, down in two, up in three, down in four. Okay. I I know this looks kind of little crazy, but it's fine. There's no other way to compare to one to the extended fifth of the third. There's no other way you can make this thing work. I've because it has a bit of an overlap, but then this works really good with Qs because now they're side by side. I had them both. Um, so wave one down into near the 50% retracement, the three versus one over 100%, which is perfect. So the third wave is not the shortest wave, anyways. So you got a wave three here, and you got this wave four right to that 100%, 38.2% mark. So the 100% is just a crazy bottom. This just exactly the same measured move of this, you know, 4.40, 4.38, talking like a point, right? So when you look at this ABC and then you look at this ABC, you see how identical they both look with that sell-off that we had last week. They look exactly the same, right? Looks the same. And this is why I was like, okay, here's your wave one, there's your two, there's your three, there's your four. This is the invalidation right there, right? Because I know that the wave four can come down to 50% retracement as well, which is 57.40, right? So it can. So you should be aware of that. Okay. It can come down to this area, but again, we have our low here, right? 58.32. And what we need to break is this 60.41. 60.41 to target 6,100. 6,100 target is not going to come into a play until we break 60.41. 60.41 is where we reject right there. See where we backed off? So right now I can make a case to see if we can make a move back up that would be a completed one, two, three, four. And then from here, we will complete one, two, three, four, five of three. That goes far back. Then you're going to have to deal with this wave four. Okay. That's where the sideways, whatever the, back and forth price action is going to come into a play. Then you get the fifth to the upside. So this is good. Um, Now the question is, if how is this four is going to develop here? So the overlap here is good. One, two, three, four, five. This is perfect ending diagonal. And then that's what I was like. It looks good until here because they look two similar sides. Like, okay, perfect. This is four round to the 100% to 38.2. I was like, we should get an oversold pretty strong bounce. And we did for the last 4 days, as you well know, because the price did manage to well all the way back up to 78.6, and that's where we backed off. Now we have a gap here as well, which is a good sign right there up on the top because we opened up with a gap yesterday. So we put a gap here. That needs to get filled as well. Another question is we have a gap down here as well. That's the election gap. You see how tricky this market gets to be. Like this price section is just is looks like it's back and forth right now. Um, Look from here. This up, you see, pay attention to this part. And well, this is I wouldn't start from here, but this is a much bigger range. So this is a much bigger, this is a 10% decline here from this top to this. This is the largest percentage decline for this year anyways. So now the question is, if this is all of four, we can do 1, 2, 3, 4, 5 to break 6041, 6100 to make a new high. The alternate way, the wave count is that we have the head and shoulder sitting here. Okay, this is the downside risk. If that downside risk comes into a play, I would still kind of consider this as a fourth wave if it managed to find support here into this zone, is to complete the damn head and shoulder pattern into a fourth wave. And then from there we can make an attempt back to the upside. That's another way to look at it. Or this fourth wave is just gonna torture everyone for some time, going sideways for some time, like this. Three up, three down, three, 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 and then that's another possibility. I cannot call this thing yet. It's just too early to say it, you know, because it's just this two directional move. You got 4.5% round to 3.7 back to the upside, just like 1 day and 3 days up. Swings are up right now. So I'm gonna keeping my finger crossed and staying optimistic. If as long as the swing stays up on a daily time frame, which we looked at it before, see if we can try to make this move clear this one. That's where we failed. Okay. So I hope you get my understanding. I know it's just this is the fourth waves are not easy to fight. Okay. But we'll figure it out. As long as you have 2 months on your option plays, you should be okay. Um, Qs, same thing here. August low, down in one, down in two, wave one, down in two, up in three, right at that 100%. There's your wave four. Same thing here, wave four, 50%. Then from there, same thing, up in one. Now we failed in two. Same thing happened here. This one actually went to 100%. Oh, 78.6 here. So there, if if we just keep them, this is what I normally have them up on my screen every day, like this. That's how I watch S&P and Q side by side. But I have to, the challenge is like to match them, like to keep them side by side together, and I hate it when they just one kind of give you a starting to give you a different look, and then you cannot be able to make the other one. It has to work together. Then it makes it much easier. You know. So so this is the plan as long as it plays out. If not, and we just end the year at the 6,000 mark, which is right there, you know, right to the 6,000 mark, just sits in a fourth wave, end the year, start the new year with the fourth wave and see which way it breaks, and go from there. That's how I see it. But look good. I mean, the way I have them, three, four. I mean, where's my August? Right there, August low. So that's how I see it side by side. It's the same story here. I mean, it's the all-time high, which is 539.15. If this is a wave one, wave two, I was kind of afraid to make, but this works really. This works good. You see, I have a pretty long wave one. I was like, look at the wave three, right at that 100% mark, which is good. It's gonna work. Wave four, right at 23.6, up in four, some sort of diagonal. That's why it has a sharp reversal. Ending diagonal is always gonna have a sharp reversal to the downside. Always remember that. This is exactly what it's here. That's why I was like, you cannot have this kind of a steep decline unless you have a diagonal next to it. There is no chance in hell the initial decline can reverse that sharp to the downside. Okay? If it's like if the trend ends, it's not gonna give up that easily. You see? Down, up, and because there's a lot of buyers sitting here. You're not gonna give up this much upside in a quick flash. There's more buyers sitting here than the sellers. And you gotta understand the logic behind price. It's very important. That's what I was like. You know what? It's this gotta be a diagonal. There's no way you're gonna get this kind of a sharp reversal without having a. Oh, then whatever. It happens. It happens. Let's move forward. Think about what can happen next. I'm not worried about what happened 2 weeks from now. It's all done. Just need to see how a price can move from here. It'll be can Santa man screw us this year for sure. Okay, match them. Why these labels are color different? This three, I gotta change it to this. Change it to black, gray. It's fine. That's it. Yesterday low was right at that 61.8. Move this one here. Okay, well, that's it. I'm gonna go. EXP? What's American Express? I don't think I have a wave card, but I'll show you. That's Apple. 10,000 screens open. What happened here? That's a EXP. Okay, let's see. Let's check the. Okay, it's in a swing third. The weekly look. Seven. This is more than enough. Okay, this is your high. All right. Throw a weave off from here. That's the big low, that spike that I just had. This is your low. Previous swing high was 296 here. So you have three zones, three price. That's your all-time high. That's the previous swing high. This is the low. Okay. Now what you're looking for is to go up. Take this low to this high. There's your 78.6. Looks like the price did went back to 304, 303, went up to 305 because it was trying to take out this high and it just backed off. Okay. So you watch this weave up at 300, downside at 296. The 296 weave up from this low exactly fits right to the previous swing high right there. That will act as a support right there. So this is your support. You need to crack, you need to now, because it poked above 303, try to make that false free, break to the upside and it just reverses back to the downside. You need to, so if you wanted to play the upside on this trade, see if you can get a 1 or 2 points. See if you can try to grab 300. Stay a go at the money because it had a big decline. You got 1, 2, 3. You see, got a big rally back up. You see? Oh, yesterday was the outside bar because it was up because it took that huge dip. 1, 2, 3, 4, 5. Yeah, so five days it just went all the way back up to 303, went to 305. And that kind of backs off. Yeah, watch this weave up and see if you want to grab something at 300, you just gotta have to see if you make a climb back up to 303, 305. Now it needs to break this 305 and get to this 307. That's the all-time high, 307.82. That 307 can give you the upside room to 313. So that would be your play. Downside weave up 296, which is this. So Yeah, I mean, this thing will get into a trouble if you just gotta reverse those fibs to break this. Yeah, you don't want to break this 291. This at 291 is going to be to the downside, the 78.6. All you do is just when you put the fibs, you can just flip them. Okay. Yeah. So 291 to a 300. That's 9. 9 from 3 over the 6. Yeah, I don't know, this thing just might just go sideways. This one actually, that's where the low was, right? From this low, 298, like this, 298.71. Okay. I mean, your risk reward sucks, to be honest. If you're gonna take an option trade on this one, you got 10 point risk to the downsides to make a lousy 6 points to the upside. It's just not a very attractive risk reward ratio, to be honest. I mean, if you get lucky to just get a big rip to the upside, that's a different thing. But financials has to make a move. JP Morgan, Chase, Goldman Sachs, they're much bigger than American Express. If they can drive the financials up, this one can catch a break. Yeah, 300. What's the ATR? 4 points. Okay, 4 points. ATR. See, that's all the flat right there. Was rising here to 8. See, it's cutting down. Yeah, because yeah, soon you see how the price looks like here. This one had a one dip, big huge dip here. But if you look at the price here, see how ATR drops. I know it drops. Um, yeah, accumulation is when ATR increases. That's where you're gonna put your money into the trades. Distribution phase, that's when your ATR is gonna your range is gonna start to drop. Oh, I don't follow these stocks. PLTR is just a matter of when the stock is gonna take a hit. To me, I think this the top is here. So this is done for the year. 82. I think this is it's a 200%. It's a 200 fib on PLTR. Yeah, you're not gonna. That's why it backed off a little bit. Yeah, you're not gonna break 200 that easily. 261.8. Yeah, it's a typical stoppage point for third wave. Still got a bit of an overlap. It can make one more attempt to the upside. Well, PLTR is a simple one. Support here. Take this high. Resistance. Resistance. Support. Support right there. You can draw your fibs if you want, or just throw VWAP. It's the same thing. You see right there. VWAP will do the same thing for you. There's two of them. You have 76, 78. So there's two here. And that's your upside. If you break 84, then you can open, expect more upside. But the point is, you're at what, 3.92 now. 3.92. Yeah, this thing is wild. Sitting in a 17 swing. Just wait. This thing is cooked. This thing is gonna fail one day really hard. 17 swing? Okay, we'll see. I've seen a lot of stocks for this kind of a high count, how they end. I don't know, I cannot time it, but this one and the other, this one. It's already starting to show back. Costco. See, now already from 13, now it's down to 14 now. Yeah, the count is gonna get bigger and bigger. The downside is gonna start tickering more and more. It needs to take out one of the previous swing low. That's that story over. Stock is done. Don't got time. I have this. I think it has one more push to the upside as long as this thing holds. Costco. I think I was working on this wave of, yeah, this fifth wave. It's an extended wave. I know that because of the diagonal here. I think it has one more push to complete this ending diagonal. Like this. No, you need an overlap here anyways. It's not gonna work. This could be this. I mean, no. You cannot put a 3 here because 3 makes shorter. Third wave cannot be the shortest wave in the ending diagonal. In a leading diagonal, the shortest wave, not in the ending diagonal. See, the 100% goes all the way here. So this one actually fits, but you need an overlap now. You can do this. That would work. Now the price has to come back down below this. Then it can work. These are very hard to trade. Like there you go. You need this confirmation right there. This and then this. You need this overlap. That gives you one more push to the upside. Then it comes right back down. I don't know. This is A, B, C. This is what they are. They're a bunch of ABCs. Yeah. But you need this overlap. This 900. What's the ATR on this? 18 points. 18 points. What the heck is the price? 940. 50, 58, 958. I'll give it 960. 960 against 920. And 920 is going to put you right at that 38.2. The next dip right there, the 932. It takes long time. You don't. Diagonals are very difficult to trade and triangles because there's so much overlap. There are like a bunch of zigzag moves. Reach shallow 2, 3, 4. Yeah, it's always extended fifth. Shorter wave one, extended fifth. You have a longer wave one, it's gonna have a shorter wave five. With that shorter wave five, stops at 61.8. Doesn't go to 100% relationship of five versus one. It's a typical stoppage point if you have an extended wave one. These are the few things you just have to remember. And then years after years, for all the practice that you're gonna do, then you just get used to it, you know? Because what it is because Elliot is so damn fractal, right? It's just all about repeating patterns over and over again. But then more and more you label and more you trade over the years, it that just becomes like, okay, well, I've seen it, I don't know, thousands of times before. It's just another sequence that I'm looking for. You got five up, three down, and five up. That's all you're fighting for. It's just for market to is to make the repeating pattern. Five up, three down, five up, three down, five up makes one higher degree. Then you have three wave down. Then you got five up. That's how the trend goes. But it takes practice. It's not something I can teach you this thing and show you this thing for a couple weeks, this and that doesn't mean that all of a sudden you are an expert now how to label stuff. It's gonna take you several years, but it's all depends on your interest and how much hours of work that you're willing to put into it to learn, and that's when your payout is gonna be in the end. You have to learn, just the days and nights you gotta sit and you gotta practice. The other thing is this: you just simply copy it, what I post. I mean, I know some of you guys just save them, take a screenshot and just save them. That makes it much easier. But if you're learning and say like, hey, I want to improve this thing over time and this and that, but you can just copy it, copy the same count. I have it, you have it. Now, if I don't change them every single day, as you all know that. For a couple days, we'll see how it looks, and if I make a change here, there, then you do the same change. Well, this way, what it will do is it will starting to improve your labeling skills, you know? Now you kind of have an idea like where to start, how to adjust your wavefront if it's necessary, you know? It's all about labeling. It's more and more you're going to label, better and better it's going to get over time. And then you can starting to say like, okay, now I'm going to try to make something on my own. Take a blank chart, start counting. But I'm not making one crash, but I don't like this word. The stock is gonna, the higher the count is, the stock is it's gonna back off. Okay. It's on a 17 swing right now. What do you think is gonna go to 100 swings? Look at this upside. Look at the size of this 17 swing from this 16th low. This is insane. Yeah, yeah. How is it? How's that played out? How that worked out from a 13th? Yeah, Celsius. It's a 13 swing. Look at this. Yeah, don't. Man, nobody's married to anything. Every company looks good to a certain point. It's gonna cool off. I don't. I don't trade PLT. I don't have it. Yeah, that worked out. Just wait. But I know the length of the swing is so huge. It's gonna has to take I don't know how many months and stuff is to make a smaller swing, then makes another one, then try to see if you can take out one of the lower swing just to for the count to reset. Yeah, but for now, for this 17 swing, you need to go back down to 21. I don't think that happening, right? Neither do you. But it's just a matter of like if it backs off. Do I even have a wave count in this? Yeah, there you go. Man, updated it. Every business is good, I know, to a certain limit. Well, I know PLTR get funded by a government. Of course, they get all the contracts. Celsius has company has no debt. How many public trade companies out there that you see has no debt? And look at their stock. Overrated stock, fake drinks. They had a big hope at Pepsi. I was reading about it. I was like, nah. I don't know if there's some sort of a fourth wave that's going to start into a 60 kind of zone. Well, looks like this third is going to take a bit of a breather. This wave I need to looks kind of crazy. It broke the 30, 45. So this was the 2021 high. Yeah, I would. Yeah, Diana looks too weird. Go like this. 1, 2, 1, 2. Yeah, like this. I would do this. Way to go. And near the 90 mark. Wait for this wave four to settle. That would pair with this too. Yeah, 100% good. I know what the low is here. So, is, uh, okay. That's pretty steep, but it's good. To keep the two here, that's a low. Squeeze this down. 1, 2, 3, 4, 5 down this. Oh yeah, this is. Oh, this thing is too much on a side because you're one higher degree. You see the price is the smaller degrees out now. It has to stay in one. You don't want to have you want to keep the bigger one in the right place. To W, you can do it up. I'll keep it here. And this damn do is just no.
Include your audio, Polo.
Gotta extend this thing out.
You want the stream to hear you?
You have a 17 swing. That's some sort of a.
The stream to hear
This makes much more sense. But the wave two is. You see how difficult it is sometimes to get just to make a damn wave count?
because they like when we play together, Polo. Polo.
1, 2, 3,
They like when we
5,
play together.
4.
They like when we play together, Polo.
Nah, it's just get some. This is 1, 2, 3, 4, 5. Yeah, that's good. See, there's no retracement of 2. That's the only way you can fit that 2 here. Right there like this. You want to make sure your wavefront has the right look. That's all. It's very important. Make this as a running flat. And then because you mess up here, everything will be wrong to the upside. Oh, that's where the practice comes, you know? It's where you need to know how to read your wave count right. You need at least, you cannot have a wave 2 if it doesn't even retrace 23.6% of the entire trend wave, you know? So putting 1 here and 2 here, like what kind of a 2 is that? You need at least this. Now at least the wave count is going to have a much better look to the upside going up. Yeah. Now this one right there, make this thing as a, see, you can do a diagonal here. That's one way to do it, like this. You make a diagonal in 1, down in 2. That's one way to do it. Second thing is this, is to move the 1 back here. Make this as a 5-way move to see if that one works. Yeah, that one worked. 3 is good. It's longer than 1. 2 is good. This looks like a 3-way move. So you see, that looks like a 3-way. You need 3, you need 5. Yeah. Now this is your higher degree. So now your higher degree, you see, now you have a smaller degree that's coming off. And you see, like the price is just has a massive overthrow here. And the price just stays right within this because you could try to connect this high. Yeah, you gotta take this one to here. The best way you gotta go. Sometimes it's hard to get a bit of a, and daily is gonna be the same. Weekly is gonna have a same high and low. Yeah, you wanna keep this thing inside. You see like how much two goes outside against this two? That's the higher degree. That's a one smaller degree. Okay, gotta take this. You see that that two disappears. See, it's not there. You need to keep that two somewhere. It fits here really good. Look at them. The overall channel is gonna mess up. That's what I'm saying. The stock has to take a hit to reset.
Yo, let's get to
This
ball.
the CEO needs to get a haircut as well.
Let's get to ball.
This-
So,
Oh, now look at this two against this. Looks just doesn't look normal. Oh, choppy. At least this one is gonna much looks better going this way. Still really don't. Yeah, it's good for now. Sometimes it just one or two pennies. Come on. Yeah, it tells like well, here comes your 200 and this. So now focus on this partner. I need this. Kind of focus from here. Yeah, that's exactly where we had this 17 swing anyways. Now it's good. Now it matches with the swing that we just looked at it. Okay. Well, road went lower. Four versus two.
wait, what happened? Wait, Polo, what happened?
Okay.
Damn. Don't let that slide.
And then this is Okay, 90 upside here, which is 3 versus 1. This is your smaller 1, 2. Smaller 1, 2 here. For a one post triangle thrust to see. This fourth is gonna come into a play against this one.
Here, add me,
So
I'll invite you.
this decline was 28%. So it's gonna be a PLTR works pretty good with fibs though. 64. If it goes hit the 200 marks and fail at 90, that will see at least a trip down to 64. That's 64 actually starting to line up with this number that I'm seeing here. Okay. But if this is only if it hit the 90 mark, if it fails there, then the ratio will change. If it passed 90 and those will, then, you can't leave it like this. You just have to see where the price first is going to start showing some weakness before you make the case for the downside. But if this is a triangle, looks like it, that this is coming to an end. If this is a triangle, because triangles only is in fourth wave, called the post triangle thrust. So if this is an extended one, your wave 5 will be shorter. We'll see if they can make one more push and open like this. Go as a 1, 2, 3, 4, 5 to complete this fifth wave. But now it looks good. Now the wave count looks much, much better. Gotta, oops, gotta play it around a little bit. That's all. Don't label anything and just now imagine me doing this in the middle of a session. I'll put you in a mute right away if you ask me that kind of chart. This takes time. I don't, you know, you don't do this in a like in the middle of a trading session. You're coming to an end anyway, so and this is insane. 14, 14, 15. It's just you see, like there's no limit because it's all about higher highs and higher lows. That's what the swing is. Higher highs, higher lows. Like look at this length of this 17th swing. Jeez. Weekly is only one because it has that fail swing. See, 1, 2 fail, took out this high right there. This company get funded with these government contracts. Free money for them. Yeah, the same thing with Moderna. Funded by the government money to build these vaccines, and look what the stock is doing right now. Brutal beating. Look at these some of these stocks I was watching. Yeah, Moderna. This look, 52 weeks low. Some of these stocks are just look at that. Year high was March, 52 weeks low. Look at the what is it called? EGN. This one. Look at this disaster. high, 52 weeks low. Same year. This is this is a daily chart. Watch the monthly. Oops. Uh, Watch the monthly chart. So the weekly. Look at the weekly chart. Weekly doesn't it has one higher bar. This is REGN. I was like, oh my God, look at this thing. Look at the monthly. Look at monthly. One, two, three, four. 4 months in a row, this thing is puking nonstop. That's a 52 weeks high, that's a 52 weeks low. 4 months in a row. This is brutal. Some stocks, they just look so bad. Look at this. Adobe. All time high, 52 weeks low. This is the whole year for Adobe. That's a great company. It runs by an idiot. Um, what's the other one? Um, I was looking at some of these. This is the worst one. You already know that. It's Celsius. These are monthly bars. Keep in mind. So you got 1, 2, 3, 4, 5, 6, 6 months. Half the year, the stock is just 1 month. Finally, 1 month, it has to put a higher bar. This is. Do you know how much time is gonna take for this to go back now? It's just crazy. There's I have Nasdaq 100. There's some of these stocks that I look for these all these 100 stocks that I look at them like there's some of them are just are weekly and stuff. I kind of like this one, DoorDash and Airbnb. This is something. Just look at this. We just looked at it. REGN. Healthcare is just so dangerous. I mean, I don't know. This is a strong stock. This Marvel technology. Look at that swing. 137%. It's a massive move. This is need to catch something like this for next year. That's all you need is 2, 3 trades. You don't need 10 of them. You just need 2, 3 trades. That's just gonna boost your account. That's what I've done. I've caught several few big runs. That just boost your capital and it just gonna gives you a much more leverage and easy, more comfortable to trade. You just need to hit few big ones. But that takes time. Cash like 125% dip, on a stock. Yeah, those are good. Yeah, but that's not easy. Gotta do a lot of work. Like look at this stock, KLA. This is a monthly, inside month, down, down, inside, down. It's like okay. Mm, That's I'm gonna whoa, 12 o'clock.